Hello, everybody. Welcome to our Investing in Fintech September 2024 webinar. I'm Yee Mun, part of the Angel Academe team, and I'll be hosting tonight's event. I'm joined by our founders, Sarah and Simon, and our amazing network manager, Michelle. So this evening, we're going to have a good old discussion about what our expert panel are seeing in the fintech space. Roughly 20% of our portfolio operate in fintech, and Angel Academe investors are always very, very excited to look at a potential new fintech deal. Marina from DC Advisory will be chairing a panel made up of Alex, one of our very own AA investors, alongside Alina and Suezann, both dynamic founders of respectively Fiskl and ScaleXP fintechs in our portfolio. So in the agenda, very, very quickly, very quick intro on Angel Academe. So then the panel discussion, we've got a good amount of time for Q&A after, and then I'll just do a really quick wrap up. So please do think of some questions. So yeah. Anyway, intro on Angel Academe. We exist to close the gender gap in startup investment, both the lack of investment going to female founders and the low number of women who are angel investing. We've been doing this since 2014, so we were very much the first kids on the block. Many of our members have been investing for a very long time and across multiple deals and multiple follow-on rounds. There's a lot more work to be done, but we've grown into one of the most active angel networks in the UK, according to Bowhurst, and we're the only female-focused network in their ranking. Our primary lens is that of gender equality, but a big proportion of our portfolio also address many of the UN's Sustainable Development Goals. We're also official UK Innovate investor partners and regularly co-invest with US VC Alumni Ventures, amongst others. Some numbers. So like the numbers that I spoke about earlier, we've reviewed thousands of pitches over the years, and we've got 51 startups in the portfolio. DD is actually ongoing for hopefully our 52nd and 53rd deals, but message myself or Michelle privately if you'd like to know more. Across the portfolio, we've participated in more than 100 funding rounds because we follow on, and investment from our angels has helped catalyze well over 150 million in total co-investment. So we're proud to have a diversified portfolio across fintech, health tech, climate tech, enterprise, B2B SaaS, consumer. We've got the lot. And like I mentioned earlier, 20% of that portfolio is actually in fintech. But if you want to know more about the portfolio, head on to our website for more info. To wrap up, we're also really lucky to have some fabulous sponsors supporting us with professional advice and sponsorship, legals, tax and accountancy, and of course, investment banking, DC Advisory, thank you, alongside our co-investment and mission partners. We love speaking with potential new partners, so if your business would like to get more involved with AA, please let me know. And now I'm going to hand the stage over to Marina and the panelists. Yeah, have a good chat.
Thank you, Yee Mun, and nice to meet you all. My name is Marina. I'm a director at DC Advisory Global Mid-Market Investment Bank. As the name stands, at DC, we provide corporate finance advisory services to both companies and financial sponsors, investors. I'm part of the technology team at DC, and I focus solely on fintech space, which I have been covering for the last 7 or 8 years. Before that, I was focusing on traditional financial institutions. As Yee Mun said, DC has been a proud partner of Angel Academe. Some of you might remember me from a webinar on the state of fintech around a year ago. And today I have the privilege of moderating this panel, which I hope will be very insightful to all of you. The purpose of the panel is to reflect on the current state of fintech market, identify any areas of bright spots, subsectors that have particular interest to investor now at the moment. And of course, no discussion today could be really complete without mentioning AI topic. So I would like to cover that as well in the context of application to financial services and fintech industry. I will let our panelists introduce themselves later, but just maybe to note, when designing this event, we thought it would be useful to share different perspectives. So we have, and we're joined today by 2 founders, Alina and Suezann, and investor, Alex, and myself as well as an advisor to fintechs at the slightly early stages in the growth and buyout stages. So as discussed, we are looking forward to our discussions and looking forward to receiving your questions, making it more engaging. But I guess with that, I will ask our panelists to introduce themselves and just to speak briefly about their companies. So Alex, what you're focusing on in your investments and what they do on a day-to-day basis. Thank you. I'll hand over to either Alina or Suezann to start.
Thank you, Marina. Great to be invited to the panel, and thank you, Angel Academe and the entire team. I'm Alina Lapusneanu. I'm the CEO and co-founder of Fiskl. Fiskl is a global multi-currency accounting software with customers now in over 200 countries, and we're proud to be have Angel Academe as investors and also to be used by Angel Academe for their own accounting.
Amazing. It's great to be here. My name is Suezann. I am the CEO of ScaleXP. ScaleXP on my platform. So there's a couple different ways to think about it, but for anyone who's worked in a company and is familiar with the accounting month-end close, we are on a mission to kind of automate completely and totally the entire month-end close. And in the process, we get a lot of data, which really is useful to finance teams to provide insights that otherwise would have to be derived in spreadsheets. So it's great to be here.
Yeah, and I'm Alex. I'm the promised angel investor. There has been a member of Angel Academe since 2015. So, but before, had a career in 20 or so years in financial services, mainly as an investor in listed equities. So this is what brought me, that piqued my interest in fintech, because it obviously addresses issues and opportunities that I thought the existing banks and other institutions were not addressing. So great to be here and looking forward to a great hour.
Thank you all. So I would say it's fair to say it hasn't been the best time for fintech and lately, thinking about public markets, Alex, to your comments earlier. And I think to start, I would like to ask you to reflect on the fintech downturn, fintech winter, if we can say in 22, 23, and the current state of play. And maybe my first question would go to founders. What are the and how have you adapted your pitch to investors? And what are the key takeaways that your business, either operationally or financially, how it has changed in the last 18 to 24 months? And also maybe what are the key opportunities that arose from this, let's say, fairly challenging time?
Amazing. Should I start, Alina, and then you can jump in?
Please go ahead.
So I think the biggest, I think the place to start is actually with the opportunity, because I think it's an amazing opportunity for fintech platforms that can deliver kind of tangible savings to their clients and to their customers. Anytime there's an economic downturn, people want to spend, they want to spend money in ways that they know they will get a definitive return for. And quite frankly, they don't want to spend money in areas which can be perceived as admin. So I think ultimately being able to show our clients and then our investors that kind of when someone spends money on our software, their team will save 3 days a month is the best way to kind of keep growing and the fintech winter, as we call it. So I think for us, that's what we've really focused on. And obviously that's a little bit more client specific. I think for investors, at the end of the day, and I guess I'm an ex-CFO, I feel like most investors make decisions based on one, intuition. Do they consider the founder credible? And two, kind of the numbers. So are the numbers moving in the right direction? How do they compare with their peers? We're always aiming to be in the top 25% of our peers, both in terms of our growth trajectory and in terms of kind of the rate of efficiency at which we're growing. So what we would consider to be our lifetime value to CAC ratio. So I think those two things in combination are what I would deem to be the most important things in kind of this winter. And what I would say isn't a complete downturn, but is certainly kind of a muddling along of the economy.
To kind of continue from Suezann, I agree that we are both in a very good space, which is financial administration. So Fiskl does accounting for SMEs. And even in a financial downturn, everybody needs office of the CFO, needs accounting. So it's not a tool you can just throw away. It's not a nice to have. It's actually even more core. So automation is very important. At Fiskl, we've also introduced over the last 2 years reconciliation based on AI, to where you basically save in your business reconciliation about 80% of the time you spend on it. And reflecting over the financial, downturn, fintech, what's happening in the public markets, private markets. When you sell to SMEs in particular, and just to kind of give a different slant to investors as to how to slice and dice opportunity, we have definitely experienced some pipeline issues with banks and companies that were looking where to invest and not making decisions very quickly. But if you sell to SMEs, the SMEs are still going strong globally. So if you deliver innovation, if you deliver cost effectiveness, SMEs still need our products. And therefore you can still grow strong. Our competitors, in my case, Xero and QuickBooks, grew extensively during the last 2 years. So not all fintech is equal. Of course, some opportunities are going to disappear, but if, like in my case, you're selling globally, you can hedge your bets across the world. And if you just focus on innovation, like we introduced AI, cost effectiveness in your solution, you can take advantage of the downturn to get some good people in.
That's a great point.
Thank you both. From my perspective, I would agree with the focus on profitability, sustainability of the business model. We clearly see that. And as you said, I would probably summarize cost-effective innovation, providing mission-critical solutions in a growing or underserved industry. Alex, any reflection from your side in terms of maybe how your investment focus has shifted, or do you place in your scorecard, do you place emphasis on some aspects of investment case that you have not really talked before, have not focused as much before?
No, at this point, the structural change is still ongoing. So it's exactly what Suezann and Alina were saying, is there is an ROI to the solutions that are being offered. There is a benefit in digitalization. There's a benefit in meeting those expanding regulatory needs, all those kind of things that help the financial services and the SMEs manage their cost base more effectively and also more efficiently on that basis. So it's impossible to deny that the overall size of the transactions that we see out there has gone down. But I think the structural trend is there, and arguably this is probably where this could probably be classified as an opportunity. It gives us the time to prove the concept, to be ready with the solutions when customers like banks, like SMEs realize the interest rates are coming down. We have to focus again on the cost base. The money is no longer coming that easily. And they're looking for ways to be more efficient and customer friendly.
Thank you. And maybe with that, it would be an interesting perspective, I think, to hear from Suezann and Alina, because both of your businesses are catering to SMEs effectively and operate in this office of the CFO space. And what quite often we see is that if there's a vertical that's becoming very attractive to investors, whether it's because of the downturn or because of some other excitement, we've seen blockchain in 21, embedded finance in 22 as a kind of key buzzwords. And probably Office of the CFO was one of these key hotspots and bright spots in fintech in 24 at least. And We see also inflow of founders, inflow of new businesses, or businesses potentially maybe not really doing, but labeling and positioning themselves as such. To your clients, how do you differentiate yourself in this environment that there are many competing solutions, and due to the nature of the market, there's more influx of new players coming in?
So I think ultimately positioning ourselves is about the benefits that we deliver to our clients. I mean, the solution, you know, because we work with finance teams and with accountants, they are very risk averse. So there is certainly a kind of road to travel in terms of kind of creating a tech solution, making sure that your tech solution is robust, making sure that your data is always consistent, kind of getting one client, getting a few recommendations, etc. There's definitely kind of a very traditional path that has to be followed with accountants always, because they are so risk averse. So I guess as a startup, our focus is really on kind of how can we compete against, you know, the dinosaurs and the gorillas. And one of the companies that we have in our sights to compete against is a company called Maxio SaaS Optics. It was founded about 25 years ago. And quite frankly, they have what is still the leading solution for SaaS businesses to kind of automate a lot of their kind of metrics. And, you know, as a startup, we can provide pretty much the same functionality at less than half the cost. It has taken us a full 2 years to kind of create this functionality. So it's not the case that a startup can just come in and kind of snap their fingers and instantly have kind of the functionality that's required to deliver complex solutions. It takes time. It takes a robust and kind of, you know, really top-notch tech team. And I would say very good processes to kind of QA or, you know, test every single release that goes live to make sure that it's delivering exactly what customers need always.
And to echo from Suezann, it's not easy to build and compete with giants. Fiskl is competing with the likes of Xero and QuickBooks in the market globally. And when you build, they have to build not only what they have, improve on what they have, but also innovate. So to Marina's question on how we differentiate ourselves, aside from providing everything, almost everything that QuickBooks and Xero do, because we're still catching up, we introduced AI quite early. We introduced AI for categorization, for assigning the tax, the client, the vendor, and matching transactions. To where we can achieve 80 to 90% reduction in reconciliation time. In some cases, we can do zero-touch reconciliation, such with a Stripe payout feed. So quite a few benefits that are not available. What makes Fiskl stronger in the space, for example, is our multi-currency capabilities, which highly exceed Xero and QuickBooks, because today in QuickBooks, if you want to do a revaluation of FX transactions, if you deal in multi-currencies, you have to send sometimes a file to QuickBooks, so they do it manually. So how can you trust the data? Same with Xero, you can't do multi-currency, even journal entries. So we have stepped above and beyond our competition in terms of tax management, in terms of multi-currency management. We aim to be best in class, and we've made it very easy for business owners to manage their finances, as Alex can attest as well, and Angel Academe using it. So it's very important for us to cater to both. I think by integrating automation efficiency and cost effectiveness, like Suezann says, you know, offer, you know, higher value at half the price, you can firmly embed yourself in the ecosystem and thrive.
See, Alex is nodding.
Yeah, as Alina said, I'm a user of and investor in Fiskl, as I am an investor in ScaleXP. So for full disclosure, but I found it a very helpful tool, and it has made my life and my year-end statements a lot easier. So it's also very exciting to see the developments that are happening in both tools and how these developments accelerate those boring, tedious tasks, not only from a hopeful financial gain in the future from the investment, but also as a user seeing those tools develop and really making people's lives easier. I mean, we've probably all been there when at 5 o'clock suddenly the MD came along and had a task for the analyst that had to be done before the end of play, and no one was enjoying that. So I think the fact that tools like ScaleXP and Fiskl are addressing those issues is making everybody's life better.
Great, and I think it's probably a good segue to actually discussing AI, because the themes that I see already transparent is about kind of tangible results, practical applications, making onboarding easier, making lives easier. And hence the question to you all, kind of where do you see the real practical examples, application of AI and AI-driven automation in your businesses and in fintech industry as a whole? And potentially maybe more to Alex, you probably see a lot of AI, print in a large font size in the pitch decks that you are seeing. And how do you differentiate between, let's say genuine, really useful AI applications and just putting 2 letters on the page? But maybe, I don't know, maybe we'll let Alex start first.
Yeah, it's a bit like, and I'm going to show my age here, it's a bit like e-commerce in the 90s, when suddenly everyone said, like, we're doing e-commerce, and essentially it just meant that someone was printing out the order and carried it physically down to the warehouse. And very often AI is not very well integrated, not very well understood by the businesses in question. So what we find is very helpful if the founder and or their team are able to understand and explain the benefits, the applications for their specific business in a way that lay people can understand them. So give us a typical example of how AI is changing the interaction that your user has with a tool, that it is changing the existing process. And we're obviously all on a very steep learning curve because it's developing so quickly. But we find that typically the founders who can explain it in very simple terms gain our trust and our confidence. And I've never had that issue with either Alina or Suezann. I mean, it was, it's quite exciting how AI can be integrated in those processes.
So Suezann and Alina, in a very few simple words.
Yeah, I can.
How does AI impact your business models?
So AI is critical. You can see all companies are trying to embed AI in one form or another. Where we found that it's really useful in Fiskl, for example, aside from reconciliation, which I've mentioned, is getting an AI financial advisor or business advisor that can tell you, answers to questions like, how do I add share capital to my company? What are my next 3 months of cash flow? Can you run some scenario planning for me? As a small business owner, not trained in accounting, you could benefit from having somebody on tap to ask questions and get financial insights without actually drilling into the reports and getting details, via your accountant, 3 days later. I think empowering the business owner to us is key. And this is where we see the most benefit of integrating AI. So we're with that, just as the first announcement in the market, we're about to launch Fi, the Fiskl financial advisor that's going to be integrated into the Fiskl platform. It's built in-house, so we use our own AI infrastructure. And for broader question, we send for broader market questions and general questions on accounting. Another advice, we send customers to Anthropic. We've ingested a lot of data, financial data, and tax codes and so on. So hopefully you'll see the use of it. So a bit of a premiere.
Thank you for that. And Suezann?
So we use AI in two ways. The first way is in terms of the month-end process, a lot of what happens is basically, well, like Alina referenced, kind of reconciliations. So AI is used in ScaleXP to kind of auto-read kind of invoices or auto-read bills, pull information from those bills automatically and kind of categorize it. So for example, if someone has an invoice that says this is an annual invoice, the system understands that that revenue needs to be recognized over 12 months. It'll pull the data from it'll pull the information from the invoice, it will prepare a schedule, and then it will prepare the accounting journals. So that's the AI that's in the platform today. Kind of where we're headed with this, and I think the reason that AI will continue to be a game changer is most of the AI that's in the market now, including ours, is all about saving people's time. So it's about kind of taking these traditional spreadsheet reconciliations and just automating them in the platform. And this will have a huge impact on finance teams. The month-end close being automated has traditionally taken kind of SME finance teams, even finance teams of like 3, 4, 5 people a week, like a full week a month. That's 25% of their time. So kind of there is large components of automation that are being released into the market today that are making finance teams far more efficient. And this will continue certainly for the next 6, 9, 12 months. But of equal importance, kind of what will come behind it and kind of what we're working on to release in early 2025 is what I would say is kind of complex querying across data sets. So for example, a little bit like Alina, but probably, I guess our customers are probably slightly larger, just have slightly more complex data. So they can go into the system and they can ask the system questions like, in the last 3 years, who were my highest growth customers and how did I acquire those customers? What channel did they come through? What's their buyer persona? Kind of, how did I acquire, what's their sector? As a person, a good analyst could answer that question. In most cases, it would take them a solid day to answer it because they have a lot of data in their accounting system, that tells them who's high growth. And then they have a lot of data in their CRM system that tells them the answer to all the other questions, right? Sector, how they were acquired, buyer persona, etc. The beauty of AI is that kind of with a little bit of AI and a little bit of machine learning, you can basically join these data sets together and then allow people to ask questions using their own words, using natural language, and give them robust answers to these questions. So it is an absolute game changer in terms of allowing people to kind of ask questions self-serve and get, instant or near instant answers. I loved Alina's examples in terms of cash flow, right? That's fundamental to most businesses, most founder-led businesses, and slightly more, kind of later stage businesses are kind of grappling with, how do we grow faster? How do we deliver more? And AI will absolutely empower teams with answers to these questions.
And I think you're raising a very interesting point, Suezann, and it prompted another question from my side. But all this kind of data analytics and reporting ability to forecast different scenario and different options to better understand your business and your customers, kind of this suite of value-added services, do you also see that the ability to monetize this, let's say for now, that are premium features will effectively erode over time, given that there'll be more and more AI features in the market available to business users? Do you see, maybe another way to put it, do you see commoditization of this type of layers and the additional features that are currently premium in the future?
I mean, we have not seen any evidence of it thus far. But of course, the cycle is generally, premium features come out and they get commoditized. And this cycle happens over and over again. So, I'm sure that features today that we consider premium will not be premium in 5 years and we'll have new premium features. I guess I would consider it to be a normal part of the business cycle. And, as a startup, our challenge is always to make sure that we are delivering the next wave of premium features, right? Understanding from our customers, what do they want today? What do they want next month, next year, and the year after that? And how are we building a platform to deliver that to them as quickly as possible? So I guess I look at kind of the ongoing cycle of, premium becoming commodity and then new premium coming out as just the normal business cycle everywhere and always.
I had an interesting
premium.
I had an interesting discussion on where AI comes in, and for SMEs, AI is a great equalizer. Whether to put it in a premium plan or should it be available on any plan with some limits on how much you can query. And definitely we think it should be available because that wow moment, even if you're a solopreneur, of being able to ask those questions is definitely I must be here, I must have this product, this is a product that helps me and I will stay with it. So I think it's modulating how you monetize and what AI architecture you use in the background to be able to serve all while actually raising the stakes and raising the prices for your plans accordingly. But you have to offer it to everyone, at least in our case.
It's a great point, and I think it also touches upon democratization of access to more complex finance scenario analysis with the help of AI. Great. Just also being conscious of time, I think I would like to kind of finish with asking you with the outlook and predictions for the future. We spoke a lot about AI, so maybe to the founders, with the benefit of a hindsight, what type of company would you start today? If you had a chance, and to Alex, what type of company would you back today, or maybe what you are looking for in the fintech space or broader financial services space?
Well, I'll start. I have to say, I'm not sure I would start a dramatically different company, if I was given a completely clean slate to start over. As a CFO, I was so deeply frustrated that finance teams took so long to close the month, and just had so many manual processes. And so frequently, I was just, almost angry that kind of people who are very analytical and highly capable spend so much time in repetitive, boring, monotonous tasks. So I believe to my core that a lot of what's happened in finance should have been automated 10 years ago. The world would be a better place if it had been automated 10 years ago. I feel like kind of what ScaleXP is delivering to the market is this automation that will allow people to step beyond kind of monotonous processing that takes place over and over and over again, kind of every single month of the year. I believe in this so passionately that, I think if I had to start all over again, I probably would have kind of focused on the automation a little bit sooner and just followed my conviction, like this must be done and we as a company will find a way to do it. I think maybe I didn't kind of, have enough confidence on day one that it could be done and that it just needed to be done fast.
Thank you. A lot of businesses are born out of frustration.
Indeed, Suezann, and like Suezann, accounting, as boring as it seems, it's such a cornerstone of a business, and I wouldn't start anything else that would have gotten me through COVID and the company through COVID and through all the financial downturns. If I were to build something separately today, given what's happening in the market, or even enhancing, I would build coming back to AI, agent-to-agent interactions for financial decisions. Let me just have you picture something like an AI insurance broker. If you all know about AI agents, they're basically a piece of the AI which you can task with a specific goal in mind to achieve a task for you. So let's say you're looking for insurance for your business, and your AI agent that's tasked with finding your insurance can go to another AI agent from the insurance brokers and not only get details according to your requirements, but also negotiate for you eventually, and actually finding the best solution for you in the market. So to me, that's the most exciting area where I can see business and AI coming together in a very impactful way. And this will be soon enough, you know, in the next 2 years. And, you know, having a personal AI financial advisor that negotiates with the bank, you know, that calls HMRC on your behalf, and so on and so on. That's a bit of a dream, but very, very realistic. So imagine AI systems that can function 24/7, yeah, making millions of micro decisions for you. That's kind of the future, and that's what gets me excited at the moment. That's why I will stick my fingers in, basically.
And it probably could be expanded into non-financial tasks as well.
Everywhere. I was just giving some relevant examples to
so many
today, but so many things can go AI to AI.
And Alex, from your perspective, any...
It's easy. So whatever Suezann and Alina are doing next is probably going to be quite exciting. But that brings us to two things. I mean, at Angel Academy, we get very excited about strong, credible founders who work with us, who are keen to explain their passion for the business, that do spend the time so that we understand what's going on and why the business is having the USP that we think we have, and then take the time to convince us of that mode. But to bring it back to the fintech side of things, I still think that in the financial services and also in the other financial reporting business, there is a lot of space to further improve, digitize, automate the current task. The regulator is very quick to further complicate the reporting situation. So there's an increasing demand for solutions that keep us away from, I don't know, from having to run to a notary to have a passport, stamped, and those kind of things, to not spend a night to prepare a board presentation for the next day. All these things can be done in seconds if we've got the right solution. So what I'm very keen to see is exactly what you've seen just earlier with Suezann saying, this is the pain point that I'm addressing. This is really frustrating for the people in the field. We're wasting time, we're wasting resources, we're probably making unforced errors in the process. And here's a solution that is addressing it. And so when I get very excited when solutions or propositions like that cross my desk. The other segment that I'm very excited by, identity management solutions. How can we prove online who we are without actually leaving our desk, without having to travel the country in an international way? So addressing the cartoon from the New Yorker of the 90s on the internet, no one knows your dog. So those are the kind of solutions that I get very excited by, and I'm very keen. If any of you is having one of those in their drawer, please send it to me.
I see. And I think we started receiving a few questions. Sorry, I'm just reading them. But I think probably the last questions that we have time before we go to audience questions is about exits, and how, maybe, Alex, how do you see, for everyone, how do you see the exit optionality, how it has evolved over time, and for Alex specifically, has your thinking about exit strategy at the point of investment, has it also changed dramatically? We don't want to go into details of UK IPO market or potentially as well, if there's different kind of geographical aspect to that. How do you think in general about exit path, investment horizon, potential investor, Just if you could briefly.
I think the overall sales and investment cycle has lengthened quite substantially. So we find that decisions are being made nowhere near as fast as probably we would have seen in the past, because a lot of these solutions are integrated into the existing workflow of the buyer. Very often the companies will insist in earnouts rather than just send a check to the investors, and then we're done with it. So overall, it is. We always said we need to be prepared to stick around for 3 to 5 years. Now probably the investment cycle is longer, and it comes down to negotiations, how's the fit between the business model of the company that we're invested in and the potential buyer. The sudden acquirer knocking on the door and just wanting our shares, that has gone down for quite substantially. It's now much more the strategic buyers of a variety of sizes. So it can also be companies that are just maybe 3 or 4 funding rounds ahead. But overall, it's not as often the let's say the financial investors at this point.
That's interesting. And I would probably echo that from what I'm seeing in the mid-market and the more later stage growth in buyout space, that clearly deals take longer, whether it's full exit, partial exit, new round of investments. But equally, I think there's a good side and a bad side to it, and the fact that investors are more conservative, but they do much more due diligence, they do much more preemptive thinking, formulating the theses about the space, mapping the winners, and probably becoming more sophisticated in some verticals, asking more thoughtful questions, focusing on unit economics, efficiency, profitability, sustainability, resilience of the business models as well. But from the founder's perspective, what we also see a lot, that it's not just about the capital, it's also about, for the investors, the right to win and the right to invest in a company is also to provide the network support, help with the operations, geographical expansions, HR, talent, so many more. And with that, actually, there's another question that's coming to the founders as to how you think about scaling and any barriers to scaling before the eventual exit. Has it changed? What are the key obstacles you probably see, key critical points and bottlenecks?
So from a scaling perspective with Fiskl, we've kept the large enterprise channel, but we've gone much more into selling to accounting firms globally. We took a long time to understand what they were looking for, about 8 months of having conversations with mid-size accounting firms. And this has become our go-to channel for scaling globally. We also sell directly to SMEs, but we've gone away from non-strategic large enterprise deals. They take too long and they hinder us from scaling.
Oh, interesting. So our experience has been a little bit different. So basically, sell direct in most cases. I'd say over 50% of our new customers come directly to us through, either direct outreach, Google Ads, something like that. We work a little bit with Xero and QuickBooks, who give us some referrals, not a lot, but we get some referrals through them. So I think our kind of experience has been just a little bit different to Alina's. We haven't yet kind of tested the accounting channel. So it's interesting to understand that took 8 months. I'm sure there were a few lessons learned in that process.
Yeah, in terms of the requirements, for sure. We wanted to make sure that we were fit for purpose for accountants and exceeding expectations and understanding what it takes to include a new product in their portfolio. So definitely we wanted to be ready. And I think it's a great channel to focus on, Suezann, when you're ready.
Amazing.
I think related question about the tech stack, and both of your businesses, you both incorporated AI very early on. So just, I think the question originates from there, and I'm just going to read it. When looking at fintech investing at the angel level more generally, what are you looking for in terms of tech stack development, and how do you give value? How do you value it at an early stage? Maybe it's to Alex. Is it possible to value? Do you look at the founder, or do you conduct, client interview expert sessions? And maybe for the founders, it's probably a strategic choice whether you first invest in a tech stack and make it scalable, globally applicable, or you start and iterate and then kind of come to the best decision, best optimal approach.
Yeah, I would love, it reminds me very much of the old sum of the parts model that I spent a lot of time building. I think in this case, it is one part of convincing us that we are backing a promising business that is viable in its current setup, in its current ambitions, that doesn't have any internal inconsistencies at this point. So do we give individual value to the tech stack development? It is part of the a yes or no side of things. So the decision tends to be rather binary. It's not that we would invest in businesses that we're not convinced by just because we're getting a 20% discount. It's a good business, and we obviously want to find a price that is good, that is attractive for us, that is satisfying enough for the founders. It's that is a very clear situation, and then the value then comes from the comparable businesses, comparable opportunities that we see how the market is currently pricing these businesses. So unfortunately, I cannot go into further specifics for the tech stack development. But to address your question, Marina, yes, we've got, especially one of the strengths of Angel Academe is that we've got a lot of people with very extensive careers and just intellectually, technologically curious people who will have experience, who will have a network that allows us to do the due diligence, to sense check these items, to understand how the strength of the underlying technology. And we get very excited and comfortable with founders who are happy to discuss these items with us.
Anything from Suezann or Alina to add?
I think Alex covered it quite well. I would look at the strength of the tech stack, the plan for the future, for evolution in particular, for scaling. I would look at the technology team in-house to see how strong the technology team is for the company, the segment that you're targeting and how you're trying to build and compete. I would say the tech stack will have to evolve because things change in the market, AI comes in, and it's a valid question to ask, and also to ask in terms of the impact of cyber defense, for your tech stack and how you're prepared for that, because that's a big question when you're handling finance as well. So I would add that to the questionnaire.
So maybe we have the last question, and it is about AI. How is it possible, or is it possible? And if yes, how does one ensure the accuracy of answers, predictions, forecasts, for example, in your businesses generated by AI assistant? And how can you notice that maybe the answers, something went wrong? And if you do, how do you optimize or recalibrate the mechanism, the algorithm?
Suezann, are you happy for? Yeah, I think Marina. I'll let Suezann ask, but you need to name someone.
It's a great question, and as everyone on this call probably knows, when you use AI, one of the risks is that A, you have hallucinations, so that's information that's just wrong, and B, you have information that's incomplete. For this reason, we in the product at ScaleXP never use kind of AI, let's call it off the shelf. So for example, when someone asks a question, it's basically going through several filters, and it's kind of being interpreted by the system in several different ways, so that we are kind of taking the language of their question and we're breaking it down into components, so that when we give them the answer, so the AI kind of, how can I explain it? So the AI is basically interpreting the language, helping us break it down. And then we have a sophisticated series of queries that sit behind that are kind of our own queries and always factually based. So you have to be quite careful about how you use AI, and you have to effectively build answers, which, in our case, we never just use like off-the-shelf AI for answers. So we always kind of play it through these kind of filters to make sure that the answers that's given to people is factually correct.
So I think the question that's sitting in from the webinar participants is related mostly to generative AI. And there are different types of AIs in the market. There is predictive AI, there is cognitive AI, there is generative AI. Generative AI, as you've all experienced, if you try to do financial queries, will hallucinate, even with guardrails and trying to get it to a financial place. It's still the next best word, prediction scenario, which is what generative AI is. In order to build financial queries, as Suezann tried to explain in a workflow mode, which was a very nice visual mind mapping you're putting there, you have to take the data to make sense of the question, take the data, put it through several steps, and make sure that you're giving as much, based on the information, as much as a correct answer as possible. But you're not going to inherit hallucinations, because you're not actually reverting to Anthropic for financial queries. It's actually using existing data and predicting in an AI modeling, learning model that's different from generative AI. Generative AI is great for general queries, a seasonality of my business, and what would be a financial prediction, given the markets, what should I focus on? But if you want to ask about your P&L, your balance sheet, your cash flow prediction, it's definitely a different type of AI implementation. So just for people not to confuse generative AI with different types of AI that can be used for financial purposes.
Thank you. I think it's a good conclusion that there are different types of AI, and one should be, differentiating between them, and there are different use cases for different types of AI and in different aspects as well. Maybe just one very last question for me, because we spoke about AI, and you, both of you, Alina and Suezann, you spoke about it in the context of product enhancement and the features that AI enables to provide your product. But do you use AI in the context of actually running your business, whether for cost optimization or apart from kind of the front end? Is there other AI applications in a kind of back end automation for your businesses?
Yes, so I think our entire teams, and probably Suezann will chime in as well, are using AI from anything from marketing to creating ebooks for customers to assessing capability, summarizing meetings. You've seen all of these use cases already, so it's definitely coming in. I can't fix some of the harder questions, like providing my board presentations with AI, or, you know, creating a good presentation with AI, but definitely we see it seeking into more and more operational use cases and saving us a lot of time and a lot of resources already.
Yeah, I would absolutely echo all of that. I'd say there's a little bit of AI in the tech team as well. You know, debugging sometimes is a little bit easier with some AI applications. So yes, we use it as ScaleXP in our own processes. All of the applications that Alina mentioned, it's just so convenient to be able to go to ChatGPT, ask some complex questions, and, you know, get a start, you know, in terms of the components to think about and to consider.
And Alex, do you use AI yourself when you, I don't know, think about the sectors, looking at the investment opportunities, assessing them?
Yeah, definitely. I mean, there is, it's so integrated that I wouldn't be able to specify which tools I'm actually using as an investor or for my day-to-day life or any other projects that I undertake. So it's definitely what Suezann and Alina were saying, a lot for the idea generation, for getting a head start on some documents, getting some idea generation on certain contexts. So I think it is already becoming pretty mainstream for many of us, and it's becoming increasingly a necessary condition rather than something special. So it's the challenge of staying up to date. So especially as someone who's not part of a big organization, doing the courses, making sure that we're aware of the latest trends so that we can actually be credible conversation partners is quite a challenge. So I have to use it for as many applications as I can.
Yes, that brings us to a conclusion that we all should be using it. Well, thank you so much. I've definitely learned a few things today, and hopefully we managed to answer, not all, but some of the questions from the audience. Yee Mun, Sarah, I'll hand it over to you. Thank you very much again, Alina, Suezann, and Alex.
Thank you, Marina.
It was a pleasure.
Hey, thanks everyone. You've actually got Simon here, not Yee Mun. Hopefully you can hear me. Yee Mun has, through a technical fault, has unfortunately dropped off the call. So you're stuck with me for our final concluding remarks, but I just want to thank everyone for great job. Totally fascinating. So thank you all very much. Just a few final words. This Yee Mun was going to talk this through, of course, but she wants you to post any key takeaways from this conversation to LinkedIn, and please tag us all in the usual way. And apparently there's going to be a present of chocolate to the best intervention. I don't know if that's going to be real chocolate or artificial chocolate, but anyway, please do keep the conversation going on LinkedIn, because there's been so much to dig into. And just a final couple of words about some stuff we got coming up. Next week on the 25th in the evening, we have our in-person member drinks. The 2 weeks after that, we have got another panel discussion, which I will be sharing, and that is actually going to be specifically about investing in AI, which we've already touched on quite a lot tonight. So hopefully we haven't exhausted the topic, and we'll have another hour's worth of chat on that. And then towards the end of November, we have our in-person Angel Investing 101 workshop. So if anyone hasn't been to that and would love to come, please get in touch. I've put Michelle's contact there on the screen. Please get in touch with her if there's any follow-up to today's conversation, or if you'd like to come to any of our upcoming events. So I think with that, thanks again to the fantastic panel. That's I know I'm not on screen, but I am clapping. and we'll see you all soon. So thanks very much, everyone. Bye now.